India can pivot? Should all that capex which is going into AI globally and especially in the western part of the world, should that fail? Should the market get restless? Should the NASDAQ take a steeper fall as we are in this DeepSeek 2.0 kind of movement? And can India pivot then at that point, given that we are the anti-AI trade?
That is what we are all thinking at this point of time, that if you take the long term, the AI story can't keep becoming the only story in the world, and there will be bigger benefit for the AI users like the Indians. And we are hoping for that pivot, but that pivot has not yet happened. Are we saying when it will happen? Maybe it requires a bigger AI correction in the world. It is threatening to come, but it's not happening. And if you look at it, the kind of investment being made by many companies, just because they want to be part of the AI race, whether they are going to get that return on investment on all those investments is not known to people, but they are doing it. So that's why it will happen, but that's why patience is going to be tested. Luckily, our macro is good, our normal economy is doing okay. So I think we will still have a situation where we can get moderate returns. But to get big returns, we need a slightly different environment.
Which is what?
No, we need to have a situation where India is seen as a beneficiary of all that has happened in the world on AI. And the rest of the world could be deemed a loser. Today, if you look at an emerging market fund, they're very happy investing in Taiwan and Korea, which make memory chips and semiconductors, and they don't want to invest in India. They don't want to invest in IT services industry. This week, many of the software companies actually fell sharply in US. So that trend has to change, and people have to feel that it's not the semiconductor and memory chip companies which are going to make money. It is going to be the services companies which are going to make money. If that transition happens, I think clearly we will be seen as the winner.
I want to just draw back to last Sunday, the budget Sunday, and what equity markets did fortunately got undone by the India-US trade deal getting sealed. But that immediate knee-jerk reaction after the STT hike, would you say now in retrospect that was unwarranted?
See, the fact is that there are a lot of traders in the market. What the government has done, forget only equity market. If you look at it, even in gaming, they did take a decision that people should not focus. They increased taxes on gaming, made it, and did something like that. You know, having been part of equity market, and I was a stockbroker between 94 and 2004, I had not seen individuals make money in derivative markets. So I mean, obviously it's a zero-sum game, so someone else made money. So I think the step done by increasing STT was a welcome step. But we all knew that it's not a step which is going to give returns immediately. It is going to benefit the investors in the long run and not in the next few days. So that's why the knee-jerk reaction was likely, but you know, finally at the end of the day, the government is trying its bit to make the cash market bigger and the derivative market smaller. I hope they succeed, because it's necessary, because it is the cash market which actually finally helps the creation of investment opportunities, new companies coming, not the derivative market. So the derivative market becoming bigger and bigger is not going to help the economy. So I think it was a welcome long-term step. Always, you know, how the market reacts is on one day is not very important, and that is how we look at it.
But Naren, do you feel that it's a bit of a double-edged sword? While there are interlinkages between the cash and the F&O market, but in that sense, what this move is going to do, and this is the second STT hike that we've seen, it's going to definitely impact the volumes in the market.
Yeah, but such a high the volumes in the cash market should also go up. Now with the STT being much lower in cash, I'm hoping some of the derivative market moves to the cash market, which is a more healthier market. So I think, you know, volumes in a market alone don't determine what is happening to the market. I think what is important is we should have a capital market which is able to raise money for the right people capital allocation has to be reasonable. If you create a capital market where it's too easy for anyone to raise money and that money gets wasted, that's not a good capital market. So somewhere a non-exuberant, super exuberant capital market is actually good for the long term. So I think somewhere all these steps done actually moderate certain things and actually help the long term, the market rather than the short term.
Beyond the tax noise, Naren, would you say that the budget did enough to not boost the morale of the investor on the street?
See, actually, if you go back, I've seen now almost 36, 37 budgets. But it is impossible for, the union budget with GST happening outside the budget and the level of taxes today in the economy that every year you expect the budget to be some very big event and a lot of things got to change dramatically. All these things are impossible at this point of time. If you take the last year, whatever tax cuts was possible happened. If you look at GST cuts, it happened in September, October. Income tax cuts on the scale that happened last year, if you think it can happen every year, it's impossible. So I would say that I think we still think that we are in the 90s and every year the budget should do massive changes. I mean, today the budget is an exercise in explaining what the government is up to, but it is impossible for any government to come and create what we call big changes in taxation, big changes in this, because it is impossible. We have a much more stable taxation regime. So if you want to go back to 90s, I think it is impossible. It would be a disaster if we went back to 90s. In 90s, in every budget, we had 10% drop in customs duties. So, imagine everyone would wait for that budget and it would be an event. I don't think we are in that phase. How to de-dramatize the budget for the investors, I do not know how to do it because everyone wants a budget to be dramatic. It can't be dramatic. That's why the party is actually a statement of what the government has done over the year, because there is nothing, you can't dramatize Part B because the Part B cannot have too many changes. And that is a reality at this point of time.
And to give it to the government, there was so much which was done all through the year, the previous year, that is outside of the budget. But having said that, what was your budget scorecard?
Yeah, we don't have something called a scorecard. See, we believe in, we look at current account deficit, we look at fiscal deficit, we look at inflation, we look at growth. So if we look at these indicators, we have a situation where things have been stable for years. If you leave aside the COVID year, I would say that all these indicators have been stable. And therefore, I would say that the budget, forget the budget scorecard, the economy scorecard has been decent. If you look at the last 10 years, the improvement in income tax computerization which has happened has ensured that almost everyone who actually has a fixed deposit has to pay tax. Anyone who trades in the market has to pay tax. So all those things has resulted in a good increase in income tax. So I would say more than the budget scorecard, I think some of the processes that have improved in tax collection has been good. And the entire macro has been reasonable. Of course, I would say state government fiscal deficit is a source of worry. I think if it went back to what it was, about 1% lower like it used to be 5-6 years back, that would be beneficial. But that is more at the state government level than at the central government level. At the central government level, we are possibly at one of our lowest fiscal deficit ever at this point of time.
Naren, I recall that you had warned people about the silver horror show which is now playing out. I mean, a 37% correction in a single day and even more than that till date. What would you like to say investors who are now catching on to the silver and gold rally? There is that massive FOMO feeling still out there.
See, actually, we did some work on silver. We found out silver is a small cap stock where you don't have earnings and you don't have dividend yield. but it is a stock which is traded across the world, so it can be manipulated by anyone in the world. It was manipulated 30, 40 years back by someone called Hunt Brothers, if you can go and look at it. So frankly, it's a commodity where if people want to have speculative fun, they should do it, because it's a product where you can have movements which are, and it has now caught the flavor of everyone all over the world, not just India. China, it seems, is much more, and everywhere in the world. So you have a product which is like a small cap stock. Is there a price to earnings in silver? Answer is no. Is there a price to book in silver? The answer is no. Is there a dividend yield in silver? Answer is no. Is there a discounted cash flow possible? No. But I think silver can go up substantially. It can go down substantially. Can anyone genuinely make a case how it will move in the next 1 month? Answer is no. So what we see, we are basically custodians of public money. So a few years back, we did give a buy call on silver. At that time, we had a framework called Nifty to gold, Nifty to silver, S&P to gold, S&P to silver, and gold to silver. On all those ratios, it had become extreme. So on that extreme view, we had given a call that invest in silver. But today it is absolutely complicated. So if someone is trading silver in a big way, that person is basically a trader. He's not an investor. Can anyone know what will happen to silver tomorrow or day after? The answer I can challenge, no one knows. Can anyone, because it's a globally traded speculative commodity, with such low amount of money which is available, with such low stock, that anything can happen to it at any point of time. So our job as custodians of public money is to highlight the risk. Do we know what will happen to silver? I really think we don't know. So we try to tell people, if at all you are very keen on silver to be part of your portfolio, or precious metals to be part of your portfolio, invest in multi-asset category. At least you are not investing 100% in it. And at least gold is a mega cap. So when we compare gold and silver, gold is a mega cap, silver is a small cap. So at least from that point of view, gold is always safer because it's a mega cap. Does gold also can be valued? Answer is no. But at least gold, there is so much of global central bank ownership of gold that maybe if it goes up 20%, some central bank will book profits. And if it goes down 20%, I think it will be some central bank will buy. So at least it's a mega cap. That is how we think about it. But it seems to everyone, I think everyone in the world, wants to have a thrill of trading. And trading in something where there is no proper valuation model is even more thrilling. For some time they did crypto. Luckily in India, the regulator stopped it. So they did crypto, they all lost money. Now they left crypto and they have moved to silver. That's what it looks. Look at crypto at this point of time. No one talks about crypto. Luckily in India, we don't have too many people trading crypto, but just see what has happened to crypto as we speak today. Again, can anyone predict crypto? Answer is no, because it is another product which is very difficult to predict.
Absolutely. So I'm wondering, you described silver as a small cap, gold as a mega cap. How would you describe India equity markets as a whole?
No, India equity market has got fundamentals. It may not be a cheap market, but it has fundamentals. There is something called price to earnings. India is the services capital of the world. It has created a lot of good companies. So you are trying to compare a product where you can't understand price to earnings and price to book with a market which has generated cash flows. It has generated dividend yields for a lot of investors. Yes, it is not as cheap as it used to be in 2020 or 2013 and all that. But that is different. But at least there's you can't compare an equity market with gold and silver or crypto.
I was just trying to tell you how the retail participant out there is thinking nowadays. But tell me, Naren, 2025 has been tough at an individual portfolio level, right? Small and mid caps have gotten thrashed out. At the same time, there has been that massive $22 billion of outflows that we've seen. Last week, we've seen just barely 2 days of inflows coming in. What will it take for the investors to come back? And B, what's the outlook for India equities going forward when it comes to small and mid caps in particular?
See, investors have been continuously there in mutual funds from 2013 till today. I mean, I keep telling my colleagues that, we have been in one of the good industries that has seen a good growth from 2013 till today. So in direct equity investing, the challenge is that people think money can be made too easily in anything. So everything requires a process. Everything requires a kind of framework with which you invest. So if you followed that, obviously in 2024, you knew that the market was overvalued. Now, the second challenge at this point of time is that people think that small cap cycles will happen overnight. I mean, obviously, small caps can also go up, but we have seen small cap cycles being, what shall I say, last quite some time. In fact, there was a 90 cycle which ended in 95, 96, which restarted only in 2002-03. For 6-7 years, someone actually didn't make any money in small and mid cap. So I would say that for people to believe another small cap super cycle will start as soon as it ended in October 2024 is wrong. At the same time, is the euphoria gone out of small caps? Answer is yes. There seems to be a reasonable amount of disinterest. As investors, your public money, we always look behaviorally. So are we seeing a situation where behaviorally we are at bottom in small and mid cap? Answer is no. So we are somewhere in the middle. It's not like silver, it's somewhere in the middle.
There comes the comparison. So if I were to ask you, Naren, looking far out the year ahead, what should a portfolio strategy be? And I know one size doesn't fit all. Everyone has a very different compulsion and reason and purpose for investing. But should one have an asset allocation strategy? Should one be as diversified as it played out in 2025? Should you have concentration of different sectors that you should be investing in? Or should you go by market cap categorization?
We have never seen a situation like today. Residential real estate, if you look at Burli, Gurgaon, all these places look so costly. If you look at precious metals, we have spoken enough. If you look at equity market, it's not cheap. If you look at debt market, I think 1 year fixed, the yields are closer to the low rather than closer to the high. We have never seen a situation like today where every asset class is not cheap. At the same time, barring precious metals, I won't say anything is in euphoria. So I would say that you can definitely, you'll have to practice asset allocation. And then at some point of time, what happens is that there'll be some asset class which will go through some period of problems and gets dislocated. Then at that point of time, you get an opportunity to increase your asset allocation in that area. Will you do it at that time? That is a challenge. But that is the whole goal of, see, you can't, everyone wants, good news and markets to be cheap. In 2007, markets were very, very good, but markets were very costly. In 2008, post-Lemon, everything was cheap. The news was very bad. Go to 2020, everything was looking bad. Markets were cheap. So people want a combination of good news and cheap markets. You're not going to get it. You'll get good news and costly markets, bad news and cheap markets. So you have to make use of it. But when will these cycles happen? It's tough, but this is a rare situation where everything, Howard Marks, my guru says, investing, the entire thing is like a moment, it's like a pendulum. It moves from extreme fear to extreme greed. For a change, I'm seeing, barring a few things like silver, I would say everything is somewhere in the middle. So you will have to be in the middle then. If something goes to extreme fear, it's a very good opportunity. But unfortunately, you're not in extreme fear anywhere. Barring silver, I would say nothing is in extreme greed also. So you avoid, you can't take extreme, you don't need to be very bearish also. So you're somewhere in the middle. Rarely you have this situation, but today we have this situation. But so that's why people ask, we have divided cycles. We call it bust, then best, then we call it boring, then boom, then bubble. So today we are in what we call a boring cycle.
Yes.
So, but in boring cycle, what happens is you can invest, but don't expect to make big money. But you should invest. It's a boring cycle. It's not a boom or bubble cycle that you have to fear at this point of time.
But this is not the time to increase allocation to equities, is it?
Compared to 1 year back, we've been telling people it should be higher. But at the same time, this is not a time when, you convert everything to equity. Debt has its own attraction even today. I don't think this is a time to convert everything to equity at this point of time. But at the same time, are we in a situation where we should have more money in equity than 1 year back? Answer is yes.
Naren, since you are a student of behavioral patterns, I want you to do the SWOT analysis of India equity markets right now. The strength, the weakness, the opportunity, and the threat.
The strength is, see, we've created one of the very good capital markets in the world, both in terms of the fact that most corporates today, having grown up in 80s and started working in 90s, see, at that point of time, corporates did not even think that they should work for the investor. So today I can see so many corporates working for the investor. And, India is when we used to meet, surprisingly, in the last 1 year, no one has told me. But before that, people used to tell us, we invest in India because when we meet your corporates, we feel like investing. Because they talk in English, they understand investing, and they tell us what we want to hear. I don't know why in the last 1 year, they seem to have forgotten that, the foreign investor. But I would say that's the strength. The weakness in recent times has been that valuations never become very cheap. It's a bit boring after 2020. 2020, 21 was the last time when markets were really cheap. After that, as an investor, you want cheap markets to actually make big money. It's missing. Opportunity, I think clearly how India is the best demographics in the world. How we are going to make use of the demographics to grow much faster than all the other countries in the next decade is the biggest opportunity. It is the biggest challenge. It is the biggest threat as well. Because how artificial intelligence shapes up and then becomes a threat to this whole opportunity of our good demographics, something which we don't know. So people ask us, what will happen? Actually, the truth is we don't know. I mean, did I know 20 years back that we won't be able to understand, we won't be able to live without our mobile phones? We can live without our purse, but not live without our mobile phones. Did I know that? The answer is no. Like that, it worries us that in artificial intelligence, what's going to happen in the next 10 years, 20 years to all of us? We don't know. So that is the challenge. This is how we look at it.
So if I were to ask you one sectoral fund where you think all of us should be investing in?
No, we've been actually focused on things like, we believe in economic cycles. So we have something called as business cycle, which keeps rotating. So because the world is changing so much, every day we have to think about what is US president thinking of the world. What is it that he's thinking? What does he want to do? So it has become such a volatile thought process of geopolitics. If you look at it, there are problems in Gaza, there are problems in Ukraine, there are problems in Venezuela, there are problems in Iran. So, it's such a volatile world. So, anything where you believe in cycles and focus on economic cycles like business cycle works much, much better. Actually, over the last 6 months, people have asked, give me a sector. But each sector has this problem. FMCG has low growth, IT has low growth, pharma has different challenges. Some of the other sectors seem costly. So, we have not been able to, banking looks fine, but the growth, I mean, it's a competitive industry, and it is possibly an industry where everyone already has good amount of money. So, although the outlook looks good, so every sector has challenge, and there are some problems. So that's why it's difficult. So I would say, we play for moderate return. People ask me, what is moderate return? I say, I will not tell you. Because if I give you a number, you will give us the money. Saying this number I'm happy with. So don't give a number. If somebody asks me, what was the moderate return which you finally expected, I'll tell you later, not today.
So a multi-asset fund or just the index ETF?
Yeah, definitely asset allocation is the way to go. We are not believers in ETFs much more. I mean, we definitely believe in asset allocation over ETFs. ETFs is good. If you have markets dirt cheap, you want to invest, I think that's a very good time to invest in ETFs. With markets being where it is today, it is asset allocation all the way.
Okay, Naren, thank you so much for your time today. Lot of insight on various assets, on how Indian investors should be approaching the market right now. Thank you.